The world's largest beer maker. In the meantime, Anheuser-Busch InBev missed analyst estimates this morning. Growth, they say, 2010 this year will slow. We partner now with the FT to bring you Lex on Bloomberg. You get a sneak peek at the Financial Times' flagship column a day early. Neil Buckley joins us now live from London. Neil, always glad to talk to you. The market is punishing InBev shares. Is it fair?
Well, I think the world's largest brewer has really served up a mixed brew this morning. There's some short-term disappointment, but I think if you look at the underlying picture, the broader picture, then AB InBev have actually delivered on an awful lot in the last 18 months. Don't forget, this was one of the mega mergers of the last boom, a $52 billion acquisition with $45 billion of debt, announced in summer of 2008, just before the financial crisis really struck. And yet they still managed to do a big rights issue in the latter part of 2008. They made a number of disposals last year, exactly as they said they would, and in fact got more for those disposals than they had targeted to help bring the debt down. They've also started to integrate these two companies very well together. But I think the problem is expectations have got a bit ahead of themselves, and that's why the analysts, or rather the markets, are punishing the shares a bit this morning.
Neil, quickly, what were investors most disappointed about?
Well, earnings for 2009 came in a little bit less than people had expected. So was the dividend. The outlook also was a bit more subdued than people thought. They're talking about the first half of 2010 in particular being very difficult. And I think there have been some expectation they might increase the estimate for cost savings from this merger, but there's been no increase so far.
Neil, we thank you so much as always. Neil Buckley joining us there from London for the FT.